Oh, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Royburn. He is the founder and editor of the Daily Gold. And Jordan, again, it's another, I think, important day to cover the precious metal space because of what we've seen this week, and even more importantly, today. We have gold getting hit quite hard, actually. Gold is down over $25 right now, sitting at about $12.77. Most importantly, though, this is going to be the end of the week, what looks like a weekly close, the lowest weekly close of the year. Plus, looking at the monthly and even quarterly charts, these are going to be looking quite weak after today. What are some of your updated technical comments, please?
Yeah, good point, Corey. Well, I've been looking for gold to, I've talked about the possibility that it could come down to 1260, 1265, and from there it would be really oversold, and then we could see a rally back to 1300. And I'm not to toot my own horn because before today I didn't think that was going to happen. But, it looks like that's going to be the case. And yesterday in the flash update, I noted that gold had a subscriber flash update, I should say. Gold had a confluence of resistance around 1310, which includes the 200-day moving average. And so it hadn't closed above that yesterday, but I thought that gold, if it could punch through that, it would probably get to 1320, maybe 1325. And gold really had to make a weekly close above those levels if it was going to have a shot to get back to 1350 or so. And it was a similar picture with the miners. I mean, GDX, GDXJ, the Huey, all those ETFs, like they had resistance that was 2 or 3% above where they are. And if they could get through that, then they could rally maybe 7, 8, 9%. And I'm a bit surprised that, basically we had this massive reversal today. And with respect to gold, I don't think we're going to see gold go above 1310. That could, unfortunately, there's definitely a risk that we're not going to see that for a long time as gold, maybe starts a breakdown here or after the next rally. So it looks to me like I would look for support around 1260, 1265. Gold would be pretty oversold, and then it could probably rally back to 1300. That's something I'd look for in July. But with respect to the longer-term charts, looking at the monthly chart, if gold closes around this level, that's going to be pretty ugly. The quarterly chart, we do have what looks to be, I'm just bringing it up here, but it looks to be like a bearish reversal candle. That just implies that over the next couple quarters we're going to see probably more weakness in gold. This is just it's not encouraging. I know we'll talk about the fundamentals and all those other things, but there's just really no reason to buy gold here and now, unfortunately.
So overall, looking at some of these lower levels, we're looking at 1260. That's going to be an important next, hopefully, stopping point. But let's talk about what happened yesterday, too. So many of the gold bulls were encouraged at the fact that gold moved up just slightly, and silver even outperformed gold to the upside. Again, not huge moves, but this was in the face of a big move in the US dollar, all really thanks to a big drop in the euro. How was that maybe confusing investors, or maybe too short-sighted of a bullish call?
Well, I think the answer to that is in today's action, because I noticed the dollar was down some today, but you have this massive move down in gold and silver. So, ordinarily it is very encouraging to see gold performing well against foreign currencies. The foreign currency basket that I use, yesterday it closed at a 14-month high, but it had given all of that back today. If gold is in, let's just call it bull mode, then what happened yesterday, that's very encouraging. But then the problem is today when the dollar's down, you should see gold going up. So the problem lately has been, gold has held up well given the strength in the dollar. But the problem is when the dollar has gone down, gold has not performed as well as it should have, both in a very short-term sense, just over the last couple months at points when the dollar's been down, and also in the big picture, as we've noted before. Dating back the last 12, 18 months or so, since gold peaked in summer 2016. The dollar, of course, had made new lows twice, and gold, not even close to making a new high. So that's a massive negative divergence. But circling back to the here and now, I mean, today really is your answer in the fact that yesterday gold held up really well. It was even higher with the dollar being higher, and that's great. But then today, with the dollar being down, that's when you want to see gold actually go up like it normally does. And so, that tells you that there really isn't much demand for gold beyond. I mean, it's just very temporary when the euro has a very bad day and gold does well. There's just no staying power after that. It just seems kind of a one-off.
Unfortunately, that is very much true. Now let's talk about then what markets or what other sectors you think are ones to watch for some sort of correlation for the precious metals, because as we just said there, the dollar has been moving up nicely and gold has been holding around there. So not really that inverse correlation that we sometimes see. What about other markets or sectors?
Well, I think, I wrote an article about this a week or two ago that the stock market really is more important for gold than the dollar. Now, if you're looking at the very short term, then sure. I mean, if the dollar is down, gold's probably going to be up. If the dollar's up, the dollar's probably going to be down, yesterday notwithstanding. But in the very big picture, Corey, we know that based on history and based on the fact that, the Fed has been hiking rates and gold hasn't broken out, and silver and the gold stocks have basically trended lower over time, albeit they haven't come close to making new lows. We know that the next likely catalyst, or the catalyst that's really going to put precious metals into a real bull market is when the Fed stops hiking and begins cutting. And normally they do that at the start of a recession or at the start of a bear market. And if you look at the S&P 500, other stock markets have been affected by the dollar rally, but the S&P 500 is, it's above all of its moving averages. It looks bullish. It still has some resistance to get through, but we had Paul Tudor Jones a couple days ago talking about, a possible blow-off move in the S&P 500, in the second half of the year. That's something that could happen before the Fed has to stop their hikes. And so we're just, the Fed is going to continue to hike until something breaks. And when that happens, then they're going to pause and move to a cut. And when they pause and move to a cut, that's going to be the point when precious metals will begin a real bull market. Until that point, I just don't see anything happening at best. At best, precious metals go sideways, but at worst, they probably break down and trade lower. But that's just where we are. As long as the stock market is in bullish mode, as it is, and the economic numbers are coming in fine, the Fed's going to continue to hike rates. And the only way that gold is going to do well in that scenario is if we have inflation that's really spiraling or accelerating out of control. And I just see very little chance of that happening, at least in this cycle. So, it's kind of a sobering take, but that's where we are here and now.
Well, and there are a couple important distinctions there, is that, yes, for the Fed to switch course, there are a few dominoes that will need to fall. And right now, all the stories that you're hearing that include economic data is that the U.S. markets are looking very strong. And there is no denying that right now. So they could easily trend up over summer for a little bit longer. Who knows, even into the end of the year. Plus, quite frankly, the U.S. is continuing to look strong. And one other thing to consider is that Powell has said he's okay with a little bit of market volatility, maybe a little bit of a natural correction in the U.S. markets. These are multiple factors that I think take time to develop, and that's why we really shouldn't be expecting any sort of a massive change in the short term. You want to address those points kind of across the board there?
Yeah, I completely agree with you. The market is still expecting 2 more hikes this year, which would be 4. I don't see any reason why that's not going to happen. And then I think 4 the following year. So the Fed just doesn't go from we're going to do all these major hikes. They don't just go from that to, we're going to, suddenly in a couple months, we're going to stop the hikes and start cutting. As you're saying, it's a process. There's dominoes that have to fall. Maybe things weaken and they say, okay, well, going into next year, we're only going to hike 3 times instead of 4. Maybe something happens and they say, well, we're only going to hike twice. And then, the stock market breaks and then they say, well, we're going to hold off. And I mean, you're right. There's dominoes like that. There's a series of things that have to happen. I mean, this is not, I mean, the Fed going from where they are now to cutting somewhat aggressively. I mean, it's really not that aggressive, but we can call it somewhat aggressive. The Fed going from that to actually ending their hikes. I mean, as you said, there's dominoes that have to happen. That's going to take time, and it's not a couple months thing. I mean, that's something that's probably going to take a year, give or take a couple months on either side. So, given that, it's just with respect to precious metals, just you have to be defensive and you have to own things that can you own companies that are really adding value in things that the industry really wants, because that's where money is going to flow in the meantime before a real bull market begins.
Okay, Jordan, let's get a quick comment on silver, because over the last about week or two, silver has been outperforming gold, and people were looking at that silver to gold ratio saying, yes, it was kind of at one of these levels where it bounces, and when silver outperforms, that's a good thing. It was mostly because gold wasn't doing anything and silver was moving up slightly. Silver's taking it on the chin today. What does that all mean to you?
Well, ultimately, Corey, silver is not going to make a big run without gold performing well or breaking out. I mean, we talked about this several months ago, and that's why I was skeptical of silver in the last couple of days, even though it had been performing really well. I just didn't see how silver was going to have this big move higher, considering gold looked fairly weak and had really no shot to break out anytime soon. So I think silver, I mean, the fact that the silver gold ratio looks bullish for silver, it's probably made a significant turn, but that doesn't necessarily mean that the sector is at a major bottom here and now, and they're both ready to explode higher. The gold and silver ratio, I think in the early 90s is when it made an ultimate peak, and silver then outperformed. But I mean, there wasn't any real bull market in precious metals at that time. So I guess what I'm saying is, here and now, I don't think the silver gold ratio has any real major implications, but definitely I think that once we get into the next bull market, probably that'll begin, sometime before the end of next year. It's very likely that silver will outperform. And, maybe silver can be somewhat of a leading indicator for precious metals, because silver peaked first ahead of gold in 2011 by several months, and it has been performing better in recent weeks. So, I mean, we'll just have to see, how they both perform in the months ahead. But I don't, as far as the gold silver ratio and like the implications for the entire precious metal sector, I don't think it really matters that much here in the meantime.
Hey, Jordan, I'm with you. There is a bigger picture here, and that is the whole domino aspect that need to fall in terms of changing the overall environment. Because right now, precious metals, yes, it's encouraging to see them hold up there, but there are too many things at play in the markets with what central banks are doing that are absolutely going to keep a cap on precious metals that carries down into the stocks. Plus, just continue to look at the low volumes that we're seeing trading in the stocks. People are distracted, rightfully so. I still think it is encouraging to see gold holding up, right around 1,300. Okay, it dropped a bit today. But the fact of the matter is, let's take a longer-term timeline on this, because there's a number of factors that need to change for, I believe, the precious metals to truly get that run up that all those gold bulls and we are waiting for. Jordan, great chatting with you. Thanks for taking some time on an interesting Friday for the precious metals. Have a great weekend.